In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming. Your strategies for homeowners. Where do you see, like, what are you pushing this year besides I like what you're doing with the non-QM and putting them in and being able to either hold on to the low rate and rent that out and put them into a new house, so on and so forth. Are you pushing any on the any no points or buy downs? Like, what's your strategy moving into 2025?
Yeah, so a couple things. One, when I sit down with clients, I oftentimes will tell people I'd rather talk to you a year too soon than a day too late. Like, I want to have that conversation with you. If you have a goal of homeownership, come in and sit down with us. It costs nothing to go through your goals, figure out a plan, see what you qualify for now, see if you can afford the payment. Because we never say no. We always say how and when. So if a client cannot qualify today,
right,
let's come up with a strategy. What's the issue? Is it credit? Great. Let's get these collections knocked down and wait 6 months. Or, hey, let's figure out a way to save for a down payment. So I look at my job as being consultative of trying to help people navigate this maze that is the mortgage process. For the things that I'm doing with clients today that are perhaps different than what I would have been doing in 2020, 2021, I realized about 18 months ago, I had a client who was in contract to purchase a home in the end of 2022. She had been looking when rates were in the 3.5% range. When she got in contract, the rate was 7%. She made a non-contingent offer, got her offer accepted. We had loan approval ready to close, and she bailed. She walked away from her deposit, $42,000 on $1.4 million purchase. She walked away from her deposit. And it made me realize at that point that I had actually failed her. I took that personal because when rates were at 2% and 3%, everybody intuitively understood why they were buying. There was a certain velocity to the marketplace of everyone's doing it. It makes sense. I see that there's a record number of sales. But when rates doubled, people needed more education. And so I kind of changed my business at that point. I'm making first-time homebuyers get on a second conversation with me after they've been pre-approved, after we've given them their qualification and their affordability, worked with them on their numbers. We do what's called a pre-approval success call. And this is really to talk to them about mortgage rates and how they move. We talk about what it looks like to buy points, and should you be paying points to buy down your rate in a high rate environment. We talk about the benefits of homeownership, the questions they should be asking before they make an offer on a home. The ways we can help them eliminate competition with their offer, things we can do to help negotiate better terms like seller credits or lower closing costs, lower price point. And then we talk about what it looks like to refinance so that they know that there's some strategy down the road. If they do decide to pull the trigger, how do we then better their situation in the future? And that pre-approval success call has been a game changer. It requires a little more work for us with each client. But we found that it takes away when we first started this conversation, this idea of, well, you gave me a rate of 7% and somebody over here online gave me a rate of 6.875. They wouldn't even come back to me with that,
right?
Because they know we've done so much for them to show them, make them understand why they're doing this and how it's going to happen and how we're going to support them in the future. We offer to, cover their closing costs on their refinances, not just the first one, but as many times as they need to until they pay the loan off. Like, I want to make sure my clients can take advantage of lower rates when they're available and not have to worry about paying the cost. So we've done a lot of education, and I think that is what it takes, because I don't ever want to have a situation where I get that phone call from a client saying, hey, Brady, I'm backing out. Like, it doesn't make sense to me. If we get to that point and they're having those feelings, hopefully they can go back to our original conversation about the benefits of homeownership and why we're doing this and the questions they should have asked before they make an offer. And so I want people to be more committed and really feel like it's the right thing for them rather than chasing what they were told to do online or from a family member.
I love your approach, man. Honestly, I love it. I think you're one of the few loan officers that I've come in contact with that's actually a professional, and that obviously shows because, like you said, you're top 100 in the country, and that's amazing. And I think that
Thank you.
that education part is missing. A lot of these loan officers, they're just selling rate, and that's why they're losing and they're suffering, right? And what I try to explain to people when they speak to me about, well, do you think I should buy a house? Because I still get calls, right?
Sure.
And I explain to them, I say, look, you're going to marry the house. You're just dating the rate, right? And if you could afford the payment today, then definitely go for it because the rates are only going to get better at some point, right? And then when the rates go down, you bought the house at the right price point because right now prices are pretty stagnant, right? They're not jumping. When the rates go down, you might get a lower rate, but you buy, you're buying a more expensive house.
Exactly.
So, don't be so fixated on what's my rate. It's what's my payment? Can I afford the payment? Right. And, if I could afford it, the payment's only going to get better. It's not going to get worse. Right. So, and that's important.
Yeah. And you can't refinance the price.
Right. Correct.
But let me tell you, I bought a home. I have a 3-year-old. We bought our current home in November of 2021, right before he was born. That house that we bought, we have a 2.5% rate. But my home, because Oakland's been a little different market than the rest of California, my home, I could not sell for what I paid for it today.
Okay.
I'm not going to sell, but I couldn't sell it for that amount. So what I have is a situation where, boo-hoo, poor me. I will never be able to get my payment down because I have a 2.5% rate. I'm never going to refinance that mortgage. But that payment is what it is. If I had bought the same home 2 years later and maybe my rate was 5, 6, 7%, I could refinance that rate. I'll never be able to refinance that price that I paid at a premium in 2021. That is my basis forever.
Right.
Whereas somebody who could get in now might be able to get the home at a lower price and then take advantage of rates in the future. So I tell people that all the time. You cannot refinance the price. If you end up waiting and you have to pay a premium to get back into the market or to get into the market, that's what it is.
Man, honestly, just so you know, I'm going to steal that from you.
Yeah.
But I'll give you credit. I'm going to say my friend Brady said, you can refinance the rate, but you can't refinance the price. I love that.
No,
I really like that. You're right.
I
that's great. But even for you, I'll tell you, don't be too sad, right? Because you're in Oakland, prices are gonna, when rates go back down just a little bit, prices are gonna jump. You'll be, but like you said, you're never gonna refinance that rate. You're never going to. You're married to that for life.
And my strategy has always been buy and hold. So I have 4 properties all in Oakland, each of which I lived in for a period of time. So my first purchase was right after I got in the business.
I love that
I bought
strategy.
a condo.
I love it.
I lived in it for a while, pulled cash out, used it as a down payment to buy the house that I eventually ended up moving my then girlfriend, but now wife into. We lived there for a bit, did the same thing, moved out, rented it one additional time. And then in 2021, we did it for the 3rd time on our 4th property. And so
I love that strategy.
I've always just figured hey, as long as what I'm leaving behind will break even, I can get a tenant in there to cover my expenses. I don't ever have to look at the values because, where you run into trouble is you can rent it for $3,200, but it costs you $5,000 a month. And now it's like, okay, as long as values go up forever, sure, I can understand paying $1,800 a month to see my values go up. But when values flatten out or go down, that's the people that panic, they bail, they walk away. And so my strategy has been make sure I can cover my expenses. Obviously, make sure I already know I want to, but if it's not me, if somebody else, make sure you want to be a landlord. Mm-hmm. And then you have to be willing to leave that money there because you're not going to have ready access to it. And it's a long game. It's a long play. So,
but that's the way to build wealth. I talk a lot about these guys on the internet that try to talk these people just to rent for life. And I think it's such a shame because, it's just, and that's what they're preaching, man. That's what they're preaching to the new generation. And what people don't understand is what you understand, that the long-term game, right, that you're playing is you're building wealth for the future, right? You're leaving something for your kids and maybe your grandkids, God willing, right, at some point. And are you taking advantage of that today? No, like you said, it's long term, and you're going to get that appreciation over time, right? But man, you've been in the business 10 years. You're going to blink your eye. There's going to be another 10 years, and think about how much those prices are going to increase in 10 years, right? And all these, fake gurus on social media preaching to the new generation, like, renting is better than buying. Don't do this, don't do that. It boggles my mind because these guys are so impressionable and they're believing this bullshit,
Right.
And you're living the opposite. You're doing exactly what you're preaching. And I love that, man. I love it. I love that, you're in your fourth house. You're probably, by the time you're done, you're going to, maybe you'll have 20 houses down,
Yeah, I would love to. I mean, I think you're spot on. Look, I try to have a nuanced approach. Not everybody should be buying a home at every point in their life. There are reasons to rent. There are benefit for sure to being a renter. When I talk to people, I tell them I have 3 magic questions. Before you make an offer on a home, I want you to be able to answer in the affirmative, answer yes to these 3 questions. 1, do you love the home? Mm-hmm. Flat out. Like, don't buy a house and then call me back in 6 months and say, oh my God, I hate the neighborhood. We need to sell. That's a disaster.
Right.
If there's a train track in the backyard and that shit comes by at 4 a.m. every morning, make sure you're okay with that. Like, make sure you really do like the home that you're going to live in. Number 2, can you tell me that you're going to stay there for the next 5 to 7 years? Right? If you end up buying at the top of the market, like I did in 2021 in my area, if I was trying to sell 2 years later, I would have taken a loss. But I'm not. I know I'm going to stay in the Bay Area where I live. There's no more land to build. We have a dynamic economy. People want to be there. These values are going to come back and they'll exceed what I paid for my home. And so having that longer horizon protects you against any, volatility. And then finally, can you stomach that monthly payment? That's exactly what you were saying, right? If rates don't come down as quickly as we expect or hope, can you hunker down, make the payment? Sure. We'd love for rates to come down, but do you feel good about your earning potential, your job prospects? Like, if you can answer yes to those 3 questions, you don't have to be smarter than Warren Buffett. You don't have to outsmart Wall Street. This is an investment for sure, but it's also the home you're going to live in, and it's just a way to reduce risk over that near and long term and put yourself in a position where you can say yes to a home rather than always thinking about the dude on social media that told you that home ownership is dumb. Like, nah, that's not the way to go. You can't live like that.
I love it. I love it, bro. You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.